is to ensure that the relationship between India and US gets better, and of course also the fact that he alluded to some kind of talks that would take place between India and US on the trade deal front today. But of course that triggered quite a bit of a rebound, a sharp rebound in the market. In fact, the Nifty managed to clock that 25,800 mark in intraday trade, ending just shy of that level, but we staged an over 300-point recovery on the Nifty. In fact, the entire texture of the market kind of flipped after those comments coming in from Sergio Gore. Sources suggest that no formal talks are scheduled between India and US for today, but there could be some talks on the informal side. But the big question is whether or not the pop that we saw in the market yesterday would extend here on, or was it just a one-day pop reacting to news flow? That's something that we will discover today. And as I mentioned, it's a weekly F&O expiry as well, so we'll need to watch out for how the index really moves. But in terms of other global news flow, in a fresh thread, in fact, US has slapped another 25% tariff on countries doing business with Iran. Now, of course, it will have an impact on India as well, because Iran has been India's trade partner, and since the Trump administration imposed tariffs on countries doing business with Iran, India, of course, will be impacted as well. The 25% tariff will be in addition to the US reciprocal tariff of 25% and the additional 25% tariff on India in retaliation for alleged continued purchases of Russian crude oil. So that would result in a total of 75%. Now, major Indian exports to Iran include some products like basmati rice, tea, sugar, fresh fruits. So it isn't like large, but of course it will have some kind of impact any which ways. So all these rice companies like KRBL, etc., will be impacted. But one of the most important projects between India and Iran is the Shabar port. In 2015, both countries signed an agreement to jointly develop the port, and it helps India bypass countries like Pakistan. Of course, India continues to support the project. It is seen as a key hub for moving humanitarian and commercial goods across the entire region. So yes, that impact will be felt on some stocks. We'll watch out for those Kohinoor Foods, KRBL, etc. But aside of that, if you look at the other global cues, Wall Street managed to hit a fresh record yesterday. Although US futures were trending lower, Asian markets are fairly positive, and the GIFT Nifty is indicating a positive start, but we'll have to see whether or not we see a follow-on buying coming in after yesterday's moves. Of course, we had big ticket IT numbers coming in post-market hours. TCS and HCL Tech, they both will be reacting to numbers. We'll take stock of what the street verdict is on their third quarter performance as well. TCS handed in a steady show. Of course, there was a one-time hit on profitability, due to the labor code. HCL Tech also felt the impact, but numbers were a beat when it comes to HCL Tech. In terms of results to watch out for today, you have ICICI Lombard, ICICI Prudential, Bank of Maharashtra, Just Dial, Tata Elxsi. These are some of the companies that will be reporting numbers. Of course, Infosys reports numbers tomorrow, so we'll be watching out for that as well. So yes, lots of cues to digest, lots of stocks to watch out for. All your stock related queries will be in focus. Of course, all the stocks that are in news and that are buzzing, we'll try and club your queries along with that, but other queries will also find place, so don't worry about that. But before getting on board our guests for today, let's quickly take a look at the top stories at this hour. Wall Street futures edge lower after S&P 500 and Dow climbed to record closing highs overnight. Traders look past Fed's independence risk and await CPI inflation data. Meanwhile, Asian markets are trading higher, with Nikkei rallying over 3% on hopes of snap polls in the month of February. The GIFT Nifty is also indicating a positive start for the Indian market. Former Fed chairs Alan Greenspan, Ben Bernanke, Janet Yellen and former Treasury secretaries come out in support of the current Fed chairperson Jerome Powell in a letter stating that the Fed's independence is critical for economic performance. US imposes 25% tariff on nations trading with Iran after Trump warns of military intervention. India is among major trade partners after China, Iraq, UAE and Turkey. Crude prices pared losses supported by geopolitical tensions in Iran and potential disruptions to the roughly 3.3 million barrels per day output. Meanwhile, gold hits a record above $4,600 per ounce and silver also reaches a fresh peak as investors pile into safe haven assets. TCS kicks off the earnings season with a steady third quarter. Revenue and margins meet expectations, but profit drops nearly 12% on one-time hit. HCL Tech beats estimates on most parameters, also raises the lower end of the full-year growth outlook to more than 4%. Performance of both the companies were impacted by the new labor codes. All right, those were the top stories. Just quickly recapping yesterday's action, it was kind of a very grim start to the week, but the texture of the market changed after those commentary coming in from Sergio Gore on the India-US trade talks and how the next round could take place today. Of course, no formal talks according to sources, but talks could be on the informal side. And also remember, Gore is in Trump's inner circle. Trump has his ear. So yes, a lot will depend on how things pan out during his visit to India in terms of what really happens to the trade deal between India and US. So yes, commentary till now has been positive, and the markets, of course, have reacted to it. We saw a 300-point recovery from the day's low for the Nifty yesterday. All eyes on whether or not the pop that we saw yesterday could continue into today as well. Of course, today it's the weekly F&O expiry as well. The Midcap index also managed to pare most of its losses. In fact, ended in the red, but way off day's lows. And talk about the F&O Qs. The Nifty put call ratio rose to 0.9 vis-a-vis 0.62 in the previous session. FIs continue to remain sellers, but DI buying support continues as well. Two stocks in F&O ban, SAIL and Sammaan Capital. But if you talk about some of the other stocks, fresh shorts were seen in Hitachi, fresh longs were seen in GAIL, and IEX saw some kind of short covering. But on that note, get on board our guest for today. Joining me is Jay Thakkar, Head Derivatives and Quant Research at ICICI Securities. Jay, lovely chatting with you, and good to be chatting with you this week, given the fact that the 5-day slump that the market saw, it managed to snap out of that, and of course a lot has to do with the commentary that came in from Gore. But after yesterday's move, do you think there are chances of follow-through buying coming in, and do you think we could sustain those gains, and 25,800 is something that one should work with as a support level on the Nifty?
Very good morning to you, Nandita, and thanks for having me on your show again. And as far as I recollect, the last time when we discussed, Nandita had said that, we had come out with a derivatives outlook as well, wherein we indicated that we're expecting the volatility to go up, India weeks to go up. And the reason for that is that since past 10 to 15 years, what we've observed, Nandita, is that 4 weeks before the budget day, so, from 31st December onwards, so if you say from 1st Jan onwards until 31st Jan, what we have observed is the India is going up, and going up by almost 25 to 30% from its December close, right? So with that, we had a target of 12 to 13 percentage levels on India VIX, and we had come out with a report on the same as well. And 12 levels were almost achieved yesterday. Right, and going forward, I think the way we have seen in the initial 2 weeks as itself, if India weeks have gone to 12, I think it has got much more room to achieve the second target of 13 as well. I think 10 to 10.5 levels now India weeks should be as a very good base now for the January series, and 13 odd levels is what we could see on the upside. So volatility is likely to stay, Nandita, is what we are expecting. But generally, two things happen when volatility goes up. Most of the time, we see markets correct. Which this point of time, it has done so as well. Sometime, you can say 20 to 25% of the time, it may happen so that the VIX goes up as well as market goes up. And that happens in the case of short covering. There are a lot of shorts in the systems, definitely, but ahead of this pre-budget month in November-December series itself, wherein market rallied from 25,700 to almost 26,400. I'm saying almost 26,400. It reached there. Almost. So in that 700 points kind of a jump, we saw sectoral churn and a lot of stocks bouncing, and we saw short covering happening. So that short covering happened, and hence we saw correction. So had that not happened, we would have seen a short covering in India weeks going up. Both. So since short covering already happened, I think now until 26,000, 26,100 levels on the upside and taken off on a closing basis to derive a conclusion that market with yesterday's recovery has formed a meaningful bottom is difficult to say because the FI numbers are also negative, right? So I would say that at least until yesterday's lows are held, 25,500 on a rounding off basis, okay, I think the short-term range will be 25,500 to 26,000 for the Nifty. Once this short-term consolidation is over, I think again we would see where the market is headed. As of now, it's more tilted towards downside.
Okay, more tilted towards downside. We'll talk about the earnings that came in post-market hours, TCS and HCL Tech in greater details, later. But how are you positioned in some of these stocks ahead of numbers, and which one do you prefer now? TCS, HCL Tech, they have already reported. Infosys comes out tomorrow within the large cap basket. How are you looking at these names?
Well, Nandita, you know that when we had discussed the count yearly outlook of ICICI Direct, we have recommended TCS as a disclaimer, I would say, to all our clients, as well as I've recommended on Moneycontrol as well. From the yearly perspective, right, we have a good medium-term outlook, positive for TCS, medium to long term. So dip should be utilized as a buying opportunity, definitely. And as far as HCL Tech is concerned, I would say that obviously, as of now, on the face of it, it looks relatively better poised, or the data wise as well as the numbers wise, relatively better than TCS as of now. IT as a sector overall, I think, might see some consolidation because we saw 2 months, November and December series, Nandita, wherein there was a good short covering from by almost 25
Hmm.
30% or 20% from the bottom. So index went up from approximately 34,000 to 40,000, right? On the IT index. After having rallied or bounced back so much, there is a good room for some consolidation and thereafter it will again go up. So I think for a couple of weeks or months, we might see some consolidation. But once that is done, I think again it will resume its uptrend. Both the stocks are positive, among which we have recommended TCS from the medium to long term perspective.
Okay, recommended TCS from medium to long term perspective. But just about 2 minutes to go for the markets to open. Any recommendations you have for our viewers, Jay?
Sure, Nandita, see, Hindustan Zinc is one stock which I still like, and earlier we had a target which got achieved, which we shared on your channel as well, YouTube channel as well, Moneycontrol as well. So I think with the rising silver prices, 30 to 40% kind of silver share. I would say Hindustan Zinc looks positive from the current levels as well. I think another 10 to 15% upside cannot be ruled out here. On the downside, I believe there is a good support. So Hindustan Zinc is the first buy. And second buy recommendation is Alchem Laboratories. Right. So I think Alchem is heading towards 6,000, 6,100. On the downside, 5,600 is a good support. So these are the two buy recommendations. One from the pharma pack, that is Alchem, and second from the metal pack, that is Hindustan Zinc.
Okay, Pharma Pack, Alchem Labs, and Hindustan Zinc. Another 10 to 15% kind of upside from here, and of course, we all know the kind of rally shares of Hindustan Zinc have seen thanks to the kind of up move that silver prices have really seen. But let's take stock of the market open, and yes, we have opened on a fairly strong note. 25,900, we are looking to reclaim that level now. On the index right now, up about 70 points on the Nifty, 25,850, that has been cleared on the upside. Sensex up almost 280 points, 84,155. So 84,000 back on the charts for the Sensex. And mid-cap index at the current juncture is outperforming. It's up 0.5%. Vis-a-vis a 0.3% kind of gain on the Sensex. Bank Nifty also looking fairly strong, another 0.5% up move there. Remember, Bank Nifty also staged a very, very smart comeback from the day's low yesterday and only extending those gains today. A breadth of the market, in a departure from what has been the trend in recent times, breadth of the market is looking extremely strong. Too early to really, call it a trend for the day, but nevertheless, it's 5:2. That's the NSE advance decline ratio right now. 1780 advances to 433 decline. So it's only improved further, 4:1. That's the NSE advanced decline ratio. So yes, things looking fairly strong at the current juncture. But let's take a look at what the sectors are up to. And no prices for guessing. It's the IT pack that's taking the lead. IT index is up almost 1%. We'll take stock of how TCS and HCL Tech are doing in just a bit. But real estate that has been hammered out of shape in recent time, not just in recent times, even in 2025, has staged a good comeback today. It's up 0.7% among the top sectoral gainers. Autos, they were beaten down yesterday, have staged a turnaround today, 0.3% kind of gain on the auto pack. Metals are up 0.5%, PSU banks, pharma, Nifty FMCG index, all the sectoral indices at the juncture are trading with gains. But let's take a look at some of the movers then. What's taking the lead? Eternal, that stock is up 4%. We'll see what the reason is behind that. But a good 4% up move coming in on shares of Eternal. HDFC Bank is also up. Remember, it reports numbers of the weekend. Ahead of that, the shares are looking okay today. But last week, it was among the biggest sectoral laggard. Yesterday as well, it wasn't really participating in the up move. But today, it's seeing a good. And there's a note also on HDFC Bank. We'll take a brokerage note. We'll take stock of that. But, from the IT pack, just want to see what a TCS is up to. I can see the Tech Mahindra is among the gainers. But in terms of TCS, 0.3% kind of a cut coming in on TCS. Numbers were steady, but remember there was a one-time hit on profitability due to the labor code expenses. So yes, that kind of soured some kind of sentiment, but wasn't really such a big negative surprise because that was expected any which ways. Even HCL Tech for that matter, although numbers were a beat, but it did have some impact of the labor code. 1.5% gain on HCL Tech. In terms of some of the other movers, as I mentioned, Eternal doing well. Eicher Motors was beaten down yesterday. It's doing well today. Hindalco, SBI, Maruti, Bharat Electronics, Hindustan Lever, these are among some of the gainers. On the flip side, Interglobe is down today as well. It's down 0.5%. L&T down 1.5%. Reliance Industries also, trading with cuts of 0.5% or thereabouts. And some of these life insurance counters that saw good traction yesterday have once again succumbed to selling pressure. And so has Trent. Yesterday it saw a good move, but today it's trading with red across, in fact trading with losses. Jay, coming to you on Trent. The stock has been under pressure. Yesterday we saw some bit of a move, but once again back in the red. The stock has been beaten down in 2025 as well. It wasn't, it hasn't really handed in great performance. In fact, was among the top laggards on the index for the year. But do you think much of the pessimism is already factored in when it comes to the chart movement as well?
I think as of now, still there is not much of clarity, although there has been some positive divergences, Nandita. But I think that in the near term, Trent is still looking a bit negative. I think only beyond the levels of 4,500 is what one gets clarity, which is 10% from here on. As the stock has still room to fall further until the levels of 3,600 on the downside. So it's 10% here and there. I mean, it has fallen quite a lot. It is reversible, I understand. There can be a good chance of recovery there too, I understand. But the data is not much supporting Nandita. In order to get that momentum out of the stock, you really need to surpass those levels of 44, 4,500 on the upside to confirm that at least the short to medium term bottom is in place. Else, you have a risk of it falling until 36 to 3,500 again.
Okay. That's the view on Trent. But just want to get in your thoughts on the charts of a KRBL, LT Foods, etc. Of course, these are in focus today after US announced a 25% tariff on nations doing business with Iran. India, of course, happens to be among the top 5 trade partners for with Iran, and of course exports include rice, etc. So all these rice companies are in focus, although I am not seeing much of an impact. LT Foods, even KRBL, etc. What would you do with these? Any kind of trend that you are spotting that one should ride or either stay away from? Jay, is my voice reaching you? Okay, I think there is some issue with Jay's line. We will just try and fix it. But we were talking about the likes of LT Foods and KRBL. These two are in focus. Although no big cuts or no big reaction coming in. LT Foods is down about 0.5% and KRBL shares are marginally in the green. So no, knee-jerk reaction coming in to the 25% tariff announcement by US on trade partners of Iran. But let's see how things pan out here on. But we were talking about TCS numbers. Let's quickly take you through what the street is really making of the numbers. Citi has come out with a sell call on TCS. The target price is at 3,020 rupees or so, lower from where the stock is right now. It says that the company reported an inline quarter, excluding all the exceptionals. Of course, there was an impact of the new labor code, and then some restructuring expenses as well, and there was some amount set aside for legal charges as well. So all those factors contributed to the miss on the bottom line front for TCS. Forward indicators, according to Citi, says that the 12-month trailing TCV was up 1.5% on a year-on-year basis, and of course headcount was also down 4%. Of course, we remember that TCS had announced a 2% cut in workforce over a period of time, and they have let go of 1% till now, and they will continue to rationalize their workforce till about March. According to Citi, the muted international growth that the company saw may disappoint going forward. And of course, in terms of their equipment and software business, that drove nearly half of the quarter-on-quarter growth, according to Citi. And when you look at Nomura, it has a neutral call. Target price is at 3,300, a little higher here. It says that the company reported a modest beat on revenue and margin. And but it has still pointed out that the visibility on growth leadership here on remains limited. Management commentary, we all heard that the management said that it is expecting the calendar year 2026 to outperform calendar year 2025, and but it has also pointed out that any kind of meaningful margin expansion appears unlikely right now in FY27 without any strong growth or leadership coming in from any kind of vertical. But in terms of margins also, it came in line 25.2% or so. So 26 to 28% that the management had highlighted earlier, whether or not it can achieve that in FY27, that's Nomura has of course said that it has doubts about that. But let's go back to Jay then. Jay, we were discussing stocks like KRBL, LT Foods. They haven't really reacted to that 25% tariff announcement by US. How are you looking at some of these rice stocks?
Yeah, I'm just checking those, and what I see is that I think Nandita, one should be avoiding this as of now. Clearly, because of as you rightly pointed out, your observation is correct that until we don't have a clarity as far as what the US is planning with respect to the Iran. I think these companies would face some issues at least in the near term. Although there is already a tariff of 50%, right? But additional tariff of 25% would still further affect the sentiment, nothing else. So there is already a tariff. It's not like that there, if we are not trading with the Iran, then there is no tariff. There is already a tariff already in place for 50%, and there is the news of this 500% as well. So if that 500% comes in, I think this 25% doesn't make sense, right? So I think short term it could be a sentimental downside. Otherwise, I think it should be definitely the quality name should be buy on dips, because what we understand is that beyond 50% any tariff levied, I mean you deal with any other country, doesn't matter, is what I think, because it's absolutely thereafter it becomes difficult to trade with the US. So obviously the companies have to find the avenues else apart from the US, right? So I don't think it should be much negative as it is read by the markets, but then sentimental it is. So 1 or 2 days downside you can see.
Okay, all right. Those were the views on rice stocks, particularly LT Foods, KRBL, etc. Of course, in the wake of tariff announcement, these stocks are in news, although not really reacting to the news flow. But let's shift focus on our queries then. Very quickly, I wanted to address Eternal. given the fact that it is the top Nifty gainer today, rallying in excess of 3%. We have a query coming in from Naveen on this particular counter, wants to know if it's good for positional trade right now. We did see some of these quick commerce companies coming under a fair bit of selling pressure in recent times. But, how would you approach the stock after today's bounce? Do you think it's ripe for positional trade right now after the recent correction?
No. It can bounce back until 310. So for short term, for a very short term, it can definitely bounce back. It is oversold. We are seeing short covering can happen in data. But positionally, if you ask me, from a medium to long term perspective, I don't have a positive view in return. And I think for a good medium to long term, the stock might have in fact found a good top, and it can consolidate or correct for some time now.
Okay, it can consolidate and correct for some time now. That's the view on Eternal. Hope that answers your query. Let's take some queries from the banking pack then. I spotted a query on Axis Bank and Bank of Baroda. Just want to spot that query. But any thoughts on these two names in particular when it comes to the banking universe? How are these two stocks poised
Bank of Baroda.
Amid all the other names?
Bank of Baroda relatively is better, is what I think, Nandita. PSU banking have relatively outperformed. Although Axis, even the private sector bank, has also done good, undoubtedly. So that is also a winner kind of stock as far as the private sector banks are concerned. But overall, when I compare, I think PSU banks have an upper hand in this entire rally of the Bank Nifty. Hence, if I have to choose one, I would be choosing Bank of Baroda.
Okay, choosing bank. And would it be okay for a 6-month to 1 year perspective, Bank of Baroda?
Yeah, of course. I think the PSU banking pack rally, which has just started, has more legs on the upside, and especially Bank of Baroda, which in fact managed to take off its multi-year resistance of around say 288. It is just still marginally above those levels at 300, 302. But from the positional perspective, I think I look Bank of Baroda relatively stronger than Axis Bank.
Okay. There's your answer, Komal Makecha, on whether to look at Axis or Bank of Baroda with a 6-month to 1 year perspective. But let's shift focus to some railway queries then. Two queries. Nana Prakasam wants to know if there is any particular railway stock that is looking attractive on the charts for a long-term position. And we also have a query from James. He wants to know your thoughts on Texmaco Rail. He's already holding shares at 175. He wants to know whether it's a good time to accumulate more. How would you address these two queries?
I think, see, railway stocks, just because of the budget, short term, you're seeing some bounce back. It happened and they have corrected again with the market correcting, but otherwise, they are all in a serious downtrend, and we have seen most of the stocks facing shorts. So I think it's good to, or it's better to avoid railway stocks as well.
Okay, better to avoid. What you're seeing, of course, is a short-term movement ahead of the budget. I know there's a query on metals universe. Alex wants to know, of course, metal index saw a fair bit of correction last week. I think it's down somewhere around 5% or so from its record highs. So Alex wants to know whether it's just a pullback or is it exhaustion, and particularly for copper prices. So in that sense, Hindustan Zinc, of course, continues to be your recommendation. But in that sense, what should one do then with Hindustan Copper as well? So entire metal universe, exhaustion or just a pullback? And secondly, what does one do with Hindustan Copper?
Copper, aluminium, both are positive. So even Hindalco for that perspective is looking positive. I think it should be buy on dips. You see the kind of rally which we have seen in Hindalco, which is not talked much. So that is also positive. And I think Hind Copper still has much more legs on the upside. So I'm bullish on Hindustan Copper. And I think that any dips here too should be utilized as a buying opportunity. I see that till 450 levels are held on a positional basis. The overall outlook for this stock is positive.
Okay, that's the view. Hope that answers your query. Very quickly, we'll take up two more queries then. I spotted a query on Vishal Megamart. Suhas Sawant has written in. He bought Vishal Megamart at 140 rupees. He wants to know whether one should hold or sell. Any thoughts here, Jay, very quickly?
I think, as of now, the retail space is facing a bit of, a consolidation or correction. So, I would be avoiding being into this space. There is a lot of consolidation which is happening. The same is happening with DMart as well. So I think this space might see some more consolidation and post which we might see some bottom forming and then an upward. So as of now, avoiding retail space is better. In fact, if you want to play, then direct FMCG is a better play. Stocks like Marico, Tata Consumer, Godrej Consumer, Dabur, these are a direct better play as compared to FMCG or consumer stocks as compared to any Vishal Mega Mart or DMart as of now.
Oh, okay. So you're not enthused by DMart despite the up move that we saw yesterday after numbers. But then two more queries. There's a query from Pooja that's come in on K Fintech. She's holding shares at 1125. Wants to know if it's a good idea to average at current levels and wants to know the support and target levels for the stock over the next 3 months.
See, the very critical support as of now for K Fintech is 1000. Below 1000, Nandita, you can see this stock falling until 900, 850 as well. So avoiding K Fintech as of now is the first thing. And I think this entire stock will see an upward only beyond the levels of 12, 1300. Till then, one can avoid being into this. In fact, if 1000 levels break, I would rather advise not to average but exit from the stock.
Okay, that's the view, not to average but to exit from the stock. Hope that answers your query. There's a last query then that we can squeeze in very quickly. It's on Lumax. Don't have the gentleman's name. Wants to know whether it can be added at current levels. Would you advise?
The stock has had a fair run up, I would say. And, from the positional long-term point of view, it looks better. But from the risk reward, I think Lumax, if at all it dips towards say 5000 or so, I mean below that it would be a good risk reward. So definitely the stock has performed quite well, undoubtedly. But a buy on dip should be the strategy.
Okay, buy on dips should be the strategy after the kind of run up that Lumax has seen. But with that, we've come to the end of the query segment. Jay, would like to thank you for taking out time and joining in and sharing your thoughts. Look forward to our next interaction as well and have a good rest of the day and the rest of the week as well.
Well, thank you so much, Nadia. Always a pleasure being on your show. Thank you so much and looking forward as well. Thank you.
Thank you. Thanks a lot. Well, on that note, take a look at what the markets are doing before we bring on board our next guest for today. We are trading, in fact, we have given up all those gains that we saw at the start of the session. The Nifty, in fact, is down 56 points. We've given up 25,800 and 25,750 as well. The Sensex also in the red, even the Midcap index for that matter, has slipped into the red. The breadth of the market, although, is still skewed in favor of gainers, but as many of our technical experts have been pointing out, that sell on rise should be the strategy. I think that's what is happening. And also the fact that, it's FNO expiry today, weekly FNO expiry. So some bit of volatility was anyway fairly expected. Bank Nifty, although, is holding out, but that has come off the day's high. Just want to quickly take a look at the sectoral picture before we go to our next guest as to which are the sectors that are contributing to the losses or weakness in the market now. Pharma, real estate. Real estate has started the day on a good note with gains of over 0.5%, but now it's down almost 1%. Autos have also slipped into that, and so has IT. IT is down 0.3%. Energy, FMCG, all these sectors have slipped into the red. What's doing well? PSU banks are holding out, 0.5% gain there. The Nifty Bank Index, as I mentioned, is trading in the green, and Metal Index is also in the green. Of course, we've seen dollar index softening in the wake of the whole, Fed subpoena that Trump has ratcheted up his fight against Fed. So that has impacted dollar index. So perhaps that's something that is cushioning metal index. But on that note, let me bring on board our next guest for today. Joining me is Ambarish Balega, Big Market Voice. Ambarish, lovely chatting with you. We've given up most of the morning gains, and the kind of up move or pop that we saw yesterday, of course, we were reacting to Gore's comments. But do you think sell on rise is at play? What is it that's leading to this volatility? Please go ahead.
No, see, basically for a trader, yes, I think it makes sense to have a sell on rise sort of a trade. But as far as investors are concerned, Possibly. I mean, this could be a great opportunity if you're talking of longer term, next 9 to 12 months. Could give you decent opportunities in the small and mid caps, which anyway had corrected quite well in the last part of 2025. And we have seen that continuing even now. So I think I mean, that part of the market should give you a decent number of, I mean, picks, which can actually give you good returns in 2026. Because I see small cap and mid caps outperforming the large caps in 2026 as against what we saw in 2025. And if you're talking of what's happening today, see, yesterday
Okay.
the way the markets had cracked and it had moved up only based on the statement of the US ambassador. And because of which I think it would be short-lived. And we have seen, I mean, again, the correction today, I mean, after starting much higher. So it's possible that we should see this volatility continuing for a while longer, and the weaker players in the market surely will be shaken up.
Weaker players in the market will be shaken up. And yes, you rightly pointed out that yesterday we just reacted to that comment. But speaking about the informal, I mean, sources suggest that there are no formal talks slated between India and US for today. As of now, sources are suggesting that. So whatever informal talks happen, do you think it could an early breakthrough is still possible after last week's 500% tariff threat, and the fact that there has been a softening of stance, Gore being in Trump's inner circle? Do you think that's coming from there, and could you still expect a trade deal by March, or do you think there are possibilities of that getting pushed through later on in the year as well? Of course, it will be like shooting in the dark, but what is your own
Right,
sense?
that's true. Now, see, if you're talking of day before yesterday, I think markets had given up that the trade treaty would ever be signed. I mean, although people are talking of March, but quite a few people, I mean, at least the veterans in the market were not really expecting the trade deal to happen. Now, yesterday's comments have changed that view to a certain extent. And again, I think that expectation would be building up. And I mean, I believe that, I mean, at least in the medium to long term, US will not have much of a choice but to finally sign off. Because we have seen that in the last 6 months, despite the tariffs, I mean, our growth continues, maybe a bit slower, but our growth continues. I mean, it has not stalled India. And at the same time, we have been signing off trade agreements with various other countries. I think the next is Europe. So I don't think US can actually ignore all this. I mean, it was a small country like a Sri Lanka. Yes, I mean, they can trample over. But someone like India, they really can't afford to. Because at the same time, I mean, we are major suppliers. I mean, when it comes to pharma, we are major suppliers. IT, they can't do without us. And in fact, if you go back to November, I mean, there are a number of food items on which they had to go back and reduce tariffs. So this clearly shows that they can't do without India, but they're trying to, I mean, have a hard bargain. And I think we have stood our ground. I mean, till now, I think that's a very big positive. Although markets may have taken it negatively, but I think that's a very big positive for India in the longer run because you are telling the world that you can still stand against US.
Okay. All right, that's about it. Of course, till day before yesterday, of course, there were very slim hopes of anything coming through. But as you rightly pointed out, that yesterday that changed a bit, and of course, we'll have to see how things pan out given the uh, volatile nature of Trump as well. We all are aware of that. But let's shift focus to our earnings season as well, Ambarish. Yesterday we had TCS, HCL Tech kicking off the earnings season officially, so to say. What did you make of the numbers? There was a one-time hit on bottom line due to the new labor code. But aside
That's
of
true.
that, any big takeaways? And going by the commentary from from TCS, where do you see the next leg of growth coming in from?
So see, I mean, TCS overall, if you see, I think it was more or less in line, and profitability also has been stable. I think it's well positioned. I mean, to be a good partner to their clients as far as cloud, data, and AI journeys are concerned. So I think if you're talking of longer term, yes, I would be bullish on TCS. But if you're talking of, I mean, if you're talking of IT overall, I think the next 1 or 2 quarters could still be a bit tough. But then longer run, I think stocks like TCS as well as HCL Tech also came out with earnings which were decent. So, like in the longer term, yes, I think you should be betting on these stocks. But short term, maybe the next 1 or 2 quarters could be a bit difficult.
Okay, next couple of quarters could be a bit difficult. But, have you taken a relook at the pecking order within large cap IT? Because HCL Tech, if you see that stock, it is trading at a premium if you compare to others like TCS, Infosys, etc. So, what would
That's
the pecking order be? I know Infosys is still pending and Wipro is still pending, but
right.
have you looked at it at all, valuation
Yeah,
wise, which is the one that you would prefer?
evaluation wise, I would still prefer TCS. I mean, if you're talking of the large caps, at the top would be TCS, next would be Infosys, and after that would be HCL Tech, and finally it would be Wipro. I mean, if you're talking of these four stocks, that's the pecking order for me.
All right. Okay. Let's talk about the earnings season in greater details then. For the December quarter, analysts are expecting a soft performance from metal companies because realizations are weak and raw material costs have also risen. I was just reading through some reports where, some brokerages are saying that absolute EBITDA and margins across steel and aluminum companies could see some moderation. Metals we all know was among the best performing sector last year, although in recent times, just this year, it has come off slightly from its record highs. But
Right.
how would you approach? Do you think it's time to book profits in some of the metal names and look at other sectors where you're finding comfort?
No, I don't think so, because we should see a further rally in the metal space. Q3 could be one off. I don't see the EBITDA margins being under pressure if you're talking of the next 2 or 3 quarters, especially if you're talking of steel and aluminum. I expect these two verticals or these two sectors to really perform well. And out of those, I would say stocks like Tata Steel, SAIL, JSW, Hindalco, Nalco, I think these are the ones to be looked at.
Okay, all right. So basically both ferrous and a non-ferrous end of the metal universe. But talking about the oil and gas space as well, macro headwinds are intensifying. The margin of safety is kind of narrowing across the oil and gas sector. Rupee depreciation, of course, we saw the rupee depreciating 6%, year on year in the third quarter itself, and that will
Yeah.
continue to weigh on margins of OMCs, city gas companies as well. I mean, how are you looking at some of these companies? Do you think the current valuations reflect the maximum pessimism, or is there more to come? Of course, OMCs have done much better than other oil and gas companies. So, how would you look at this space in terms of valuations, and what are you expecting in terms of earnings as well?
No, I think it's already priced in to a very large extent. I mean, I don't expect the rupee to depreciate much further from here. I mean, I don't expect a rupee to be at 93, 94 in 2026. Uh, and again, if you look at the oil prices, I mean, despite the geopolitical issues, oil may not shoot up because clearly, because of Venezuela, I think like most of the supplies would be taken care of, even if there's a disruption from Iran. So, because of which we have not seen oil prices really shooting up despite the Iran issue. And as far as OMCs are concerned, clearly like it's a crude oil price play. And unless we see a major sort of a rise in oil prices, OMCs will not suffer. So I think from that point of view, one can still continue to hold on to OMCs, but there is no major reason to go out and buy OMCs at this point of time, OMCs or even refiners. But then if one is holding, I would say there's no reason to sell. I mean, this will possibly give you market or slightly better than market returns.
Okay, all right, got your point. No reason to sell, but no reason to buy either. Bank earnings are anticipated this weekend. You have HDFC Bank, ICICI Bank reporting numbers. There are concerns around deposit growth moderation and elevated loan to deposit ratio when it comes to HDFC Bank in particular. Do you think these concerns are overstated? Because since the third quarter update, the stock has, tanked somewhere around 6 to 7%. How are you looking at the entire banking space and private banking space in particular? And HDFC Bank, any thoughts there?
No, see, again, if you look at the performance of most of the private sector banks, especially the larger ones, and especially HDFC, I mean, we've not really seen any outperformance. Despite the sort of weaker sort of earnings which we are talking about, I don't think that will result in HDFC Bank cracking from these levels. I mean, I suppose it will just hold on. And if you're talking of overall private sector banking space, in fact, I see performance coming in from the smaller banks. I mean, if you're talking of IDFC First, if you're talking of something like RBS or a Bank of Maharashtra, I think these are the ones where you'll see, I mean, a performance which could actually surprise the markets, even a South Indian bank. And as far as the PSU banking space is concerned, yes, I mean, I would still continue to be positive on that. I mean, one would be clearly earnings, no doubt, where we have seen decent earnings over the last couple of quarters. But I think the more important thing is possibly a consolidation, which could be announced in 2026. Although, I mean, government sources have denied it as of now, but I believe that finally there would be a consolidation, and we may end up with just about 4 or 5 large PSU banks.
Okay, yes, that is on the cards, and of course, that's one thing to watch out for when it comes to PSU banks. But where do you think the outperformance will come from in this quarter, in the third quarter earnings season? Do you expect staples to be a big winner? Consumer durables, staples, etc. Do you think the
Surely.
GST benefits and tailwinds will flow through in this quarter finally, or would you wait for another one?
No, I think it will flow into, I mean, in this quarter, because in Q2, despite the GST benefits being announced, and it was applicable at least for the last 1 week, 10 days. In fact, that worked out to a certain extent in a negative way for a number of these FMCG and consumption stocks. Basically, because there had to be a GST adjustment to be done in the supply chain, because of which a number of I mean, these companies had booked, I mean, a bit of losses as far as that is concerned. Now, when it comes to Q3, I think they'll get the complete benefit of the GST reduction and the increase in sort of sales which you've seen. And I think that's very clear as far as the autos segment is concerned, white goods segment is concerned. So I think with the numbers finally in black and white, I think you will have a decent rally in FMCG and the other consumption stocks.
Okay, expect a decent rally going forward in FMCG and other consumption stocks. Just want to understand, you mentioned that mid and small caps will fare much better than large caps this year in 2026. Any particular pockets that you would look at now, in anticipation of that happening?
I would say, like in the EMS, which is mostly in the mid caps, something like Keynes Technology, I think should do well. I think we have seen a very good correction in this stock, and it's one of the very few companies which are getting into the semiconductor space, and they've already started a pilot plant. And I mean, because of certain concerns which were raised as far as accounting policies and related party transactions are concerned, I mean, the stock had cracked what about 40-50% in the recent past. I think with the Q3 numbers and the management commentary, I think which should clarify all those doubts which are there. I think this stock should be back in the reckoning.
Okay, all right. EMS, that's one stock sector that would be in focus. Just reading through some flashes on L&T, and the stock is also reacting to it. I think L&T is the top laggard on the Nifty right now, 2% down. I'm just going to, kind of read out those flashes. This is a report from Media Company and reports on economics and business news of Middle East. Now, Kuwait is discussing, according to reports, Kuwait is discussing cancellation of oil project tenders worth $8.7 billion. And Kuwait, of course, is looking to rebid the tenders. I think L&T is the L1, the top contender in tenders worth over $4.5 billion. L&T order inflow guidance, if we remember, for FY26 was 10% higher than FY25. If such a move really comes by, and L&T was the L1 bidder here, what kind of an impact do you envisage? Any kind of reaction to this, report-based news?
Yeah, surely. I think it would be a bit negative, not a major negative, because it doesn't form a huge part of their order book. But yes, it would be a bit negative for L&T, and we could see some correction. But I would say utilize that correction to buy. I suppose the other reason why LNT could be a bit weak is again those rumors of Chinese majors being allowed to bid in India. I think that's I mean, doing rounds because of which we have seen correction in LNT as well as BHEL. But then I would say utilize all these corrections to
Hmm.
buy in because talking of and when you buy something like LNT, you're buying for the next 3 4 years or more than that.
Hmm. Hmm. So, of course, you mentioned BHEL. Of course, so there are news reports stating that the curbs on China could be eased. So that would,
Right.
of course, impact companies like BHEL, Siemens Energy, etc. So, would you look at this also the weakness in these stocks as a buying opportunity as well?
Absolutely, because I believe that it will not be opened up completely for the Chinese companies. It would be possibly for
Hmm.
those projects where, I mean, we don't have that expertise. The Indian companies don't have that expertise. I think those specific projects, some niche areas, I think they may be allowed, but may not be, I mean, a blanket one.
Hmm. Okay. All right. So fine. You can in fact utilize these dips to buy into these stocks. But going forward, Ambrish, I want to get your thoughts, get in your thoughts as to how the sentiment is really, in the market right now, especially in terms of FII flows. Right, 2026. Everybody was banking on FIIs to return. Of course, it's too early in the year to really speculate as to when really they'll come back. But in terms of the fact that we don't have any concrete color on the India-US trade deal, despite just the fact that okay, there will be another round of talks soon. What is that one trigger? Earnings has started, but what is the sense? When will FIs come back? Because so far this year they have pulled out in excess of 12-13,000 crore rupees already.
No, in fact, if you look at overall market, I'm not talking of only the large caps or blue chips. I think the rest of the market has corrected decently
Hmm.
well. And I mean, I would say valuations are better than what we saw in 2025. And as far as FIs are concerned, I think the rupee has to stabilize wherever it is, whether it's at 90, 91, or 89, or even 92. I mean, it has to stabilize at those levels for a while. And that's when I think FIs would come in. Basically, because, see, India is one of those very few bright spots globally which are still growing. And the fourth largest economy, you cannot be ignoring the stock markets of the fourth largest economy. You've taken a view, you had exited to a large extent, but finally, if you need to get that alpha, you would have to come back to India to participate in these markets. And I think that should happen sometime in 2026. I think it's very difficult to say as to exactly when, but I expect that as far as 2026
Hmm.
is concerned, finally, I think we'll have a positive FI flow.
Okay, okay, we're all waiting for FIs to really come back. But any advice, to our investors as to how to, navigate this leg of the, weakness or volatility, as you may call it, and also the fact that, gold, silver, they continue to rally, and of course, we've all seen what has happened over the last week: Iran tensions, Venezuela, so yes, safe haven buying continues. But in terms of portfolio construct, any advice in terms of how one should look at exposure to precious metals, exposure to equity? What should the construct be? Your thoughts?
No, I mean, the way the precious metals have moved up, I mean, at this point of time, I will not suggest anyone to increase the exposure. And at the same time, I would say possibly hold on to your exposure with some sort of a stop loss. Because after this sort of a move, I mean, even the reverse can be quite sharp. It's very difficult for me to say as to where the reverse will
Hmm.
happen or at what price it will happen because I don't follow gold and silver very closely. But history has shown us that after this sort of a move, whenever a reverse happens, it can be quite sharp. So better to keep a trailing stop loss and it's quite difficult to sell. I mean, for
Hmm.
most of these investors, that after seeing this sort of a move and after seeing a top, it's quite difficult to sell. But I think you need to be ruthless and exit whenever the stop loss, I mean, gets hit. When it comes to equities, like I said, I think
Hmm.
time to increase your allocation to the small and mid caps. I'm not saying sell your large caps and get into mid caps, but then if your allocation possibly had come down to about 15-20%, time to increase it to 30-35%.
Okay, that's the view. Mid and small caps, you can look to nibble into them in this leg of the correction. But just one last question: as we head into the budget, there are some themes that gain traction just ahead of budget. One is railways, and that's what has been happening any which ways. It's been, seeing spurts of buying. Defense tends to do well. Fertilizers as well. As a pre-budget
Right.
theme for a very short term, anything that would that you would advise?
No, I think, I mean, these are the themes we played for pre-budget. And I mean, this is what we have always seen. But at the same time, if you see the last couple of budgets, I would say the last 5 to 6 years, I mean, the budget finally has not had too much of an effect on the market. It just lasts for a day or so. Because unlike in the past so many decades, I mean, there are a lot of decisions taken outside the budget than during the budget. So budget finally doesn't have too much of an effect. So I would say whatever the budget is may have an effect for a day or two maximum, and then we are back to our normal market. And yes, I mean these themes give you some sort of a return. As a trader, you play these themes, not as an investor.
Since you mentioned a lot of these, decisions taking outside of budget, one such rude shock was on the 1st of January in terms of the
Absolutely.
new cigarette excise duty, and we did see how the stocks reacted. Any
Exactly.
thoughts? Because it tends to be inelastic, right, to price
Yeah,
changes.
absolutely.
So, your thoughts?
Absolutely.
Would you also look at accumulating some of the stocks on dips?
It's a great time to buy ITC. If you're talking of the next 2, 3 years, it's a great time to buy ITC because after a long time we have seen these levels. And again, if you go by history, whenever I mean we have seen increase in excise for cigarettes, and that normally used to come during budget. I mean we used to see a huge correction in ITC, and those who had bought in that correction have made tons of money going ahead.
Okay, so buy the dip. That's the view on some of these cigarette names. With that, Ambarish, would like to thank you. Always a pleasure getting in your perspective, and I look forward to more conversations ahead of budget. And of course,
Sure.
I wish you a happy rest of the week. Thankfully, we have an off on Thursday to go and vote for the BMC
Right.
elections, and of course, we are looking for looking at a budget on Sunday. So lots of changes happening. I'll see you soon. Thanks a lot for joining in.
Thanks.
Well, on that note, sure, okay. On that note, take a look at where the markets are. We're down 78 points on the Nifty now, 25,700, 714 to be exact. So yes, 25,700 at risk again. So that one day pop that we saw yesterday seems to be fizzling out now, and a fair bit of volatility has set in. It's a weekly FNO expiry as well, so that was expected any which ways. But the mid-cap index has also slipped into the red. It's down 0.5% now, underperforming the benchmarks. The breadth is still skewed in favor of gainers, but let's see whether that sustains or not. L&T, that's the top Nifty laggard on the news flow around Kuwait considering cancelling some orders, so that's down 2.5%. HCL Tech has now slipped into the red. It's down almost 2%. Dr. Reddy's, Reliance Industries, Trent, Cipla, these are some of the other laggards on the index. Eternal, on the other hand, continues its upward trajectory for today. It's up 3%. ONGC, Hindalco, SBI, Tech Mahindra, these are some of the other names that are doing well. HDFC Bank and ICICI Bank are holding the fort today, 0.5% uptick on both the stocks at a time when the markets have given up their early gains. But the list of gainers is fairly slim. So the entire texture of the market has actually taken a U-turn. But let's see how things pan out. As we speak, the Nifty Bank Index is also on the verge of breaking into the red. All right, then I'll see you at 3 p.m. with closing bell. Let's see how things pan out. Expect a fair bit of volatility today, as is the case on expiry days. So tune in at 3 p.m. Till then, be with us on moneycontrol.com for all your latest news and updates. Have a great day. we were on the verge of reclaiming the 25,900 mark, but then there was a complete about turn. The same thing happened yesterday, but yesterday it was on the upside, and today we saw a turn towards the downside. But the good part is that we still have 20 odd minutes to go for the markets to shut, and we have recouped some of the intraday losses. So we were precariously close to that 25,600 mark. We were on the verge of taking it out on the downside, but thankfully that didn't happen, and now we are back above that 25,700 handle. In fact, at the current juncture on the screens, I can just see a 60-point cut on the index. At one point in time, the cut was over 100 points. It has in fact been a 140 to 150 point range that we have been working with today, and right now it's a 60-point cut. So 25,730. That's where we are at when it comes to the Nifty. The Sensex is down somewhere around 230 points. Mid-cap index, it was seeing sharp cuts in excess of 1%, but it has done extremely well in the last few minutes. It has recouped almost all of its losses, just about 90 points down on the Nifty mid-cap index, and much of it has to be much of the recovery that we have seen in the market from the day's low, it can be attributed to the financials and banking lot, because the Nifty Bank index has staged a very good comeback. It has in fact reclaimed that 59,550 mark. It's in fact very close to that 59,600 mark as well. It's up over 140 points, and the breadth of the market also deserves mention. It was fairly poor. We started on a very strong footing, just let me just remind you that. But then things turned around. We saw the breadth worsening quite a bit. But once again, it's even Stevens right now, 1:1. That's the NSE advanced decline ratio. So we've seen a good amount of recovery coming in from the day's low. In terms of sectors, as I said, banking and financial is doing well. So PSU Bank index, that's the top sectoral mover. IT is also doing fairly well for itself, 0.4% kind of gains. TCS was trading in the red. HCL Tech was flat, but other IT names were kind of buzzing, which is what is keeping the IT sector afloat. Metals doing well. Dollar index, of course, has cooled off, and that's aiding sentiment for metal stocks. On the downside, however, real estate, there's no solace for this particular index. Real estate index had severely underperformed in 2025, and it continues in 2026 as well. Pharma, autos, FMCG are some of the other sectors that are on the back foot. But the good part is that, yes, I know the one day up move that we saw kind of fizzled out, but yesterday's swing low was 25,473. Thankfully, we are still, far away from that level. So, not sure whether one should really worry or panic so much. But a lot of this volatility that we saw today is attributable to the, fact that it is weekly expiry day. But of course, to understand where things are headed from here, and what one should be doing in this leg of volatility, extreme volatility that we are witnessing on the Lal Street, let me bring on board Sandeep Agarwal, who's the fund manager at Sovilo Investment Managers. Sandeep, lovely chatting with you this afternoon. Yesterday, of course, the sentiment turned around because of commentary coming in from Sergio Gore, in terms of how he plans to take things forward when it comes to the India-US relationship. That really triggered the bulls, and we saw a very, very solid comeback in the market. But there were questions as to whether or not it will sustain, and that's exactly what that's something that has really not happened. Would you attribute today's volatility to F&O expiry, or would you say that the kind of bounce we saw yesterday was short-lived, and we need to see more concrete details when it comes to trade deals to actually say that the sentiment has turned around?
Hey, hi, good afternoon, and thanks for having me on the show. So I will just highlight few things, right? So we have to remember that, the large part of the impact which was there because of initial tariff hike for many companies which has exposure to the US, a lot of that has come into numbers, and even if they would not have come in numbers, the commentary or the update from management has led to analysts making those adjustments in the numbers, and because of that, huge cuts have already happened, and that is the reason you will see a lot of micro caps, small caps, and mid caps have corrected a lot. Although at index level, mid cap index may not look very low. So that is one. So large part of the cuts have happened, and this kind of moves when happen, what we are seeing in last few days is that now it is a place where I think there is a buyer in even mid cap and small cap at regular interval, and because of that, whatever goes down sharply, it is being absorbed. So I think this is a typical consolidation phase of a bear market in the small or micro cap, which we are witnessing. And I think fundamentally the companies which are good, which deliver good numbers, good management, good quality products to offer, I think they will all recover very quickly and very fast. As you know, some clarity on the tariff comes or some relief in budget comes. So I think people are looking forward to that. Also, remember Indian investors have matured over time. They have seen so many cycles, so they are very clear that whenever the time is appropriate, whenever there is a deep correction, they will definitely go ahead and buy what they want to buy. And I think that is what is playing out. Also, incrementally, we hear a lot of seasoned fund managers and CIOs now coming on channels and saying that small cap and mid cap have entered their comfort zone to buy versus what it was a year back when they were extraordinarily expensive. I think all those things have started playing together, and I think Indian market has long way to go because we are at almost bottom of the cycle in terms of FI selling. Lot of selling has happened. I don't know. I can't say that they will not sell more, but I think a large part of selling has been done. Our economy is doing quite well. The inflation rates are contained. RBI has a lot of scope to cut rates. So all the positive things which we can think of, I think they are coming, and people are pricing all those things also at the same time when they are pricing in a depreciating rupee in the current environment.
Okay, so you concur with the fact that when allocating fresh money, one should look at broader markets because you said that mid and small caps. That's the hope that mid and small caps will do better this year.
So if you see fundamentally, the growth rate in mid and small cap has been higher than large cap, even last few quarters also, and I think that trend will continue. Only thing is that in large cap, what happens, your margin of safety or it is a hiding place and more liquid, so you can get off your big positions and all those things. So that is the advantage. And that is the reason a lot of money gets allocated there. While in mid and small cap, because of the size of the market cap, there is a liquidity issue to buy also, and there is a liquidity issue to sell also. And we face that challenge in mid and small caps, and that challenge cannot be ruled out even further. So you will see very choppy mid and small cap movements in next few months also. But I believe that fundamentally mid and small cap, because of the base at which they are operating, they will definitely deliver better growth than large cap. And now they are coming, they have started looking better in PEG ratios than large cap. Let me put it that way. And for us, PEG ratio is much, much more important than the PE ratios.
Okay, PEG ratio much more important than the P ratio. Before I talk about the structural themes to look at, I want to understand your verdict on the numbers that have come out from the IT stable. TCS, HCL Tech, of course, steady quarter. HCL Tech more so, given the fact that it has managed to beat expectations in terms of margins and revenue, and of course, it has also upgraded its guidance. For TCS, of course, we've seen that one-time hit on bottom line as a result of the labor code. The street view is fairly cautious, but I was just going through Macquarie report. They are pretty upbeat on TCS. Their price target indicates almost a 50% upside from current levels. After the kind of up move we've seen in IT since last quarter, in the matter of a quarter, we've seen a good rally coming in IT, right? So post that, do you see headroom for upside right now, or would you say that a couple of more quarters would be needed, or would need to unfold before we see more upside from here? What is your sense?
So, every stock, how it will perform is a factor of two things: the earnings growth and the multiple one will like to assign. So, very tough to give a call on multiple because different fund managers have different kind of perspective view, and global economy and global macros and Indian macros, everything plays a role, including currency into that. So very tough to give that call. But let me give you a perspective that, the penetration level of Indian IT in the largest market in US in the sourcing side is very, very high. Even within the global sourcing, if you take pure IT services, will be more than 90% market share. And if you include BPO, will be 70-75%. So it is a very big number, which we are already there. So the chances of growth from here is very low for the sector as a whole. Secondly, the almost 8 or 10 years or more than 10 years, we have seen substantial growth in the services revenue at global IT spends. And it went up substantially during the digital times. But last 1.5, 2 years since AI has come, the hardware, after 10, 12 years of decline, it has taken a front sheet, and it has started growing in last 1.5-2 years, and that is the reason you see the big moves in the Nvidias and other stocks. I believe that once this hardware replacement cycle is over, you will see some spend again coming back in the software side, and that is the time probably when you will see that all the companies benefit. But remember that there are two challenges to the Indian IT at a macro level. One, the market is highly penetrated. We have the lion's share of in the global sourcing market, and that industry, even if it comes back post hardware replacement, the growth will be minuscule, 2-3% at global level, and maybe India level 6-7%, and this company can do 7-8%, let's say hypothetically. Second is that large caps also have a double whammy from the fact that earlier, till before COVID, the deal, who can participate in which deal, was decided by the balance sheet size and the past execution track record of the size of the order book they have executed. Now those conditions have been completely taken away. So the biggest challenge large cap Indian IT companies are facing is that from 3-4 vendors in a deal, now there are 15-20 vendors in every deal, because the size of the companies are no more important in any deal. And that is the reason that even the small companies are competing with the largest company in the sector whenever a new deal is coming. So I think this challenge is real and very tough to get over. So I would put it this way, that I think that the large cap Indian IT is a sector at best 5-6% growth for long term, and the mid cap can be 10-11% growth, and the small cap could be 14-15% growth. And in terms of multiple, the PEG ratios are highest in mid cap, followed by large cap, and then small cap. So I think now time has come where what you saw in mid cap between 2021 to 24, the way they went up 10-12x in very short span of time, maybe small cap can, I will not say 10x, but they can do better, much better in terms of return, followed by some returns in mid cap and very low return in the large cap. It is a very, very matured industry.
Okay, point taken. But let's also talk about platform companies, right? Especially the quick commerce ones. Sources say that Labour Minister has nudged companies to discontinue branding of 10-minute delivery to protect the gig workers, right? Now, meetings were held with leading platforms, including the likes of Blinkit, Zepto, Zomato, Swiggy, etc. Quick commerce companies haven't really reacted yet. But what would this really mean? Because if the 10-minute branding goes, do they not lose their edge? And of course, this will also impact their profitability, right? So if this really happens to remove the 10-minute branding, what would this really mean? And how do you see this development if at all it happens?
No, so I think that whether 10-minute branding stays or goes, it will have a temporary impact. See, what has happened is these companies, these platforms have changed the way people are living their life, and that impact cannot be taken away by changing the branding. So today, if you want something, means we are seeing in our daily life at morning 6, if I want something, we do Blinkit, Insta, and we get the things. So I think that cannot be taken away by just changing the branding. So I think these platforms are doing an excellent job. All this noise around this, some impact will be there, some cost increase can be there, but this is the way the human lives have changed. You will be surprised to know that more than 8 to 10 million people have got employed through platforms in various businesses in the country in last few years. So it is a very big population which is employed. And obviously, when you grow to such a scale, we have seen that in IT services software side in late 90s, that you have to bring a lot of changes to the system process and everything. I think those things will come, the insurance, what they are asking, security and all those things, there will be some cost impact. I think the habit which already people have, they won't mind paying 2 rupees extra for delivery or 5 rupees extra, and that is all we are talking about in change of cost. So yes, in near term that might look difficult and all that, but in long run, I don't think this makes any dent to the structural theme or structural thesis of the platform businesses.
Okay, all right, point taken. And lastly, which are the structural growth themes that could shape the next phase of wealth creation according to you? Where would you look at when you spot themes right now?
So we are very clear that we will have to be very aggressively into the capital markets theme, because we believe that the penetration of capital markets is still very low, and you compare the AUMs of international of other countries like US and all, and with Indian AMC, there is a huge difference. So we have a long way to go. Equity penetration is very low. So we want to be very aggressively, and we have been consistently investing in the capital market theme for quite some time. And second is manufacturing. We believe that we have a challenge for last few quarters in the private investment side and private capex side, and that is the reason the manufacturing stocks have made a big negative return. But over a long term, I think for us, growth will come in manufacturing. There is a lot of focus of everyone towards that. So we are very, very aggressively focused on manufacturing. We are focused on capital markets. We are focused also in banking side because we believe the NPA cycle which is there currently is one of the best cycle. There is virtually not much credit cost. It is very good. So and credit growth is also going to pick up with private capex coming in. So these are few things which we love a lot. Although we do see we also like the pharma theme, but we are little away from the CDMO now because it has gone very expensive. So we have got out of the CDMO theme. Now we have gone back to the generics theme where the stocks are very, very reasonably priced, and we are right now not preferring any FMCG or CDMO thing or IT. Though we have also some small exposure to the platform because we love those businesses.
Okay, all right. Taking your point, all those sectors that you mentioned on your radar. But with that, Sandeep would like to thank you for taking our time and joining in. Look forward to a longer conversation pretty soon. I had a whole lot of questions that I wanted to ask, but I'll save it for next time. Thank you for joining in this afternoon.
Thank you.
Thanks a lot. All right, let's shift focus to the market then. Just talking about the recovery that we have seen in the last few minutes. Nifty has staged a triple-digit rebound from the day's low, 126 point, just to be precise. Kind of recovery from the day's low, 25,730 on your screens. Even the mid-cap index, and that has staged a very, very sharp rebound. Over 550 point rebound coming in on the Nifty mid-cap index from its day's low. Breadth of the market, at one point in time, it was, fairly poor. Although we started on a strong note when it comes to the market breadth, but now it's back to even Stevens, marginally in favor of declines, but nothing really to worry about. 1461 advances to 1476 declines. So it's almost even Stevens. So yes, one would take heart from the kind of recovery we've seen from the day's low today. The Nifty Bank index cruising above that 59,500 mark. It's up somewhere around 0.2%. That's one big factor, one big contributor to the recovery that we have seen in the market from the day's low. In terms of sectors, as I already mentioned, we have other financials also doing well. PSU banks were topping the list of sectoral gainers, but real estate continues to get hammered, right? Last year we saw severe underperformance coming in from the real estate basket, and this year hasn't been good either. In the somewhere in the middle of the day we saw real estate staging a good recovery, trading with good gains, but that didn't really extend. And of course today, right now, we are seeing Nifty Realty among the biggest laggards in terms of sectors. But on that note, to take stock of the last 4 minutes of trade, I have with me Osho Krishan, of Angel One joining in. Osho, great to be chatting with you. But one would have thought after the kind of sell-off we saw around midday, one would have thought that yesterday's one-day bounce was just like a one-day wonder. But given the kind of recovery we've staged from the day's low, how are you looking at the setup for tomorrow?
Very good afternoon, Nandita. Firstly, thank you for having me at the show. Well, yes, no doubt we are witnessing a very volatile trading session. The last couple of sessions has been very volatile. But overall, what we are witnessing that at the lower end, there is some kind of resilience from the bulls. So I'm expecting that in the short-term perspective, the view remains on the similar manner that on the lower end, on technical front, the 100 exponential moving average approximately around the zone of 25,600 and 550 should be providing very strong cushioning to the counter. And on the higher end, until we again see some kind of strong movement beyond the 50-day exponential moving average, which is approximately around the zone of 25,900 spot levels. So till that time, there can be some kind of both ways movement, but that will be providing opportunity for the day traders because we are witnessing a quite good moves. And for a trader who is looking for such movement that has been taking place after a very long period. So I'm expecting that if the same could happen for another 2 to 3 trading session, that will be very much aligned to the trader's perspective. But overall, I'm quite bullish, not very much pessimistic as of now, but my bullish view will be more aggressive once it breaches the zone of 25,900 on a decisive manner.
25,900 on a decisive manner. Today, we almost breached that level, but that was not to be. Soon after, we saw markets take a strong U-turn. Just about 2 minutes to go. Osho, anything that was on your radar or that you are keeping on your radar for tomorrow in terms of stock
Yes,
ideas?
definitely. There are a few counters which are looking very positive. First one is Bajaj Finserv. Bajaj Finserv has been seeing some kind of reversal from the 200 exponential moving average. So that counter should be kept into radar and even can be seen as a BTST kind of a trade. It is hovering currently around the zone of 2010 odd levels. So one can look for buying opportunity in the counter. Approximately 1975 should be seen as the stop loss. And the higher end 2060 will be the immediate target that one can expect. And the other one is Eternal. Eternal has also seen a very strong reversal on the technical front, and I'm expecting that this momentum should continue on the short-term perspective. 300 is the first target, followed by 306 from short-term point of view.
Okay, Eternal and Bajaj Finserv, those are the two stocks to keep on your radar. Of course, also could double up as a buy today, sell tomorrow, BTST strategy. But hold that thought, Osho, just taking stock of market close before we discuss more stocks and how things are looking like when it comes to, individual stocks. Look at the Nifty. We are shutting shop above that 25,700 mark, which is a good sign. Nevertheless, 70 point down, but still it's a good rebound from the day's low. We were on the verge of breaking below 25,600, but thankfully that didn't happen. Midcap index also with cuts of somewhere around 0.3%, but it did well to recover over 500 points from the day's low. Sensex ending down by 260 points at 83,609. Bank Nifty ending the day in the green, 59,500. I mean 545. That's where it's at. So we are shutting shop above 59,500, and that's a good thing because that level was being mentioned by a lot of analysts I've spoken to. In fact, if you look at the breadth, marginally skewed in favor of gainers. Even Stevens 1:1. So that's also a good thing, a good takeaway. Of course, there was a fair bit of volatility today because it was Nifty expiry, but just to remind you, tomorrow would be Sensex expiry because Thursday is a market holiday on account of BMC elections. So the expiry day for Sensex has been shifted to tomorrow, preponed by a day, Thursday being a holiday. But in terms of other sectors, quickly take a look at the texture is looking like at close. PSU banks almost 1% gain, IT over 0.5% gain. Metals, banks, these are some of the sectors that ended the day in the green. What didn't do well were the likes of Nifty Defense, that was also down in excess of 1%. Realty index down 1%. Pharma, autos, FMCG, energy as well were down in trade. In terms of individual movers, then just quickly take stock of some of the stocks that were on the heavyweight side that didn't do all that well. L&T, that stock was down 3.5%. Of course, at one point in time, it was down almost 5% on the back of some news flow. But L&T came out with a clarification after that. It kind of paid some of those losses. But nevertheless, among the top laggards, L&T down 3.5%. Reliance Industries also down 2%. So all these heavyweights, were not really providing any kind of support to the index today. Even ITC was down 1%. Axis Bank was down. Maruti Suzuki, Dr. Reddy's, the Cipla, these are some of the stocks that didn't do well. On the upside, we have ONGC that picked up pace and that ended with gains of 3.5%. Eternal, as Osho also mentioned, it's one of his picks. That stock was up 3.5%. TCS, HCL Tech were muted in trade, but look at Tech Mahindra, that was among the top Nifty gainers, up almost 2%. ICICI Bank provided support to the Nifty Bank index today. That stock was up 1.5%. SBI 1.5%. TCS, although at one point in time it was pretty flat, but picked up traction, ended higher by almost 0.9%. And Bajaj Auto, Apollo Hospital, Nestle, Wipro, these were among the other gainers. But what do you make of the movement on shares of ONGC, Osho? 3.5% gains. Crude prices also edging higher amid flare-up intentions in Iran. So ONGC, would you look at ONGC within the oil and gas pack?
Definitely, there has been very strong traction, especially in today's trading session. The counter have seen a very strong momentum, nearly 3.5% on the higher end. And technically also there have been multiple developments, positive developments for the counter. Firstly, it has emerged above the 20, 50 and 100 exponential moving average in a single day. So that's a very positive thing that to be seen in a single day for a counter. So I'm expecting that the momentum can be seen to get aggravated because that has been backed by very strong volume. So one can look for opportunity in this counter. I'm expecting 252 followed by 254 as the first or intermediate hurdle or as a target. If it breaches the zone of 254, then from there onwards we can see some kind of continued momentum over a period of time. But from a shorter term perspective, for a kind of a BTST or maybe a positional 2 to 3 days kind of a bit, one can look for buying opportunity. 254 will be the immediate target that one can expect in the quarter.
Okay, ONGC looking good on the charts. But let's talk about an ICICI Pru as well. It reported numbers today. Good set of numbers. Annual premium equivalent was up 4%. The value of new business that grew 19%, and VNB margin also came in higher at almost 25% vis-a-vis 21.2% on a year-on-year basis. Stock ended flat, but it has seen good traction in the last 3 months. How would you look at this stock? Would you prefer this stock within the life insurance space? And which are the next targets to watch out for? Not very far from its 52-week high of 706 either.
Technically, this counter is at a very strong resistance level. Historically, also we have seen the zone of 680 to have seen some kind of a strong rejection. And again, in the past 5 trading sessions, the counter has seen some kind of volatility around the same level. So I will be waiting for a decisive breakthrough of 680. Any levels above 695 or 700 odd levels should be seen as a buying opportunity because that will confirm a trend, a reversal trend of double bottom formation in this counter. So my advice will be to wait for a conclusive buying opportunity. If it moves beyond the zone of 695, then one can look for buying opportunity in the counter. Else wait for some kind of correction because technically the counter have already seen a decent movement from the zone of 620 towards 680. So technical parameters are quite overstretched at current point of perspective. So overall, one should either wait for some kind of correction. If it happens, then 640, 630 will be the advisable level to start accumulating the counter. Or if there will be a breakout, then 695 will be the next levels from where one can look for buying opportunity in the counter.
Okay, that's about ICICI Pru. But there's another result reaction that I want to discuss with you. It's GTPL Hathway. That stock, I think plummeted somewhere around 17% from the day's high. At one point in time, the stock was up somewhere around 8-9%. Numbers were fairly steady. So, what do you make of this sudden reversal? Sharp sell-off coming in. What just happened here?
There might be volatility because of the numbers, but overall, technically, if I have to quote, then this counter was already into a weaker strength. It was hovering below the short-term moving average. So technically, there was no positive sentiment associated to the counter, but with the kind of closure that this stock has given, it has given a breakdown from the historical support of nearly 95, 96 odd level. So I'm expecting that with the kind of correction, if something aggravates or there will be a follow-up sell-off in the counter, then we can see a further correction towards the zone of 74 in the near-term period. So technically, it is looking very weak. If there will be any kind of bounce back aftermath of the quarterly earnings, then there may be a possibility of a decent pullback. But as of now, it will be avoided from a technical point of
view. What about Balaji Amines? Stock was, on a tear today, up 11%. And of course, that has taken the monthly gain, 1 month gain up to 10%, but the stock hasn't done well. In the last 6 months or so, it has shaved off 30% or so. Would you look at chasing the stock based on the recent price action, or would you steer clear?
See, overall, this will be a kind of a reversal pattern which the counter is into formation into, but overall, I will be waiting for a decisive and sustainable move beyond the zone of 1250 followed by 1280. Then only we can see some kind of counter trend in this stock. overall, looking at the technical setup, it is at a historical support levels. So at current levels, it is not advisable to exit from the counter. If someone is already holding position, then it will be advisable to stay invested. But overall, my conviction will increase once it surpasses the zone of 1260 on a decisive manner. Then from there onwards, we can see a kind of a counter trend in this stock, and one can look for buying opportunity from short to medium term point of view.
Okay, that's about Balaji Mines. 1250, that would be a crucial level to watch out for on Balaji Mines, to call it a trend reversal really. But what about the cigarette makers, the likes of Godfrey Phillips, ITC? Of course, since the start, it not been a great start to the year for these stocks. They got a rude shock on the first itself in terms of the new excise duty. If you look at the month to date returns, likes of ITC, Godrej, they have shaved off 13, 20, 13, 14, 15% or so. But would you look at the dip as buying opportunity? Because today we saw a fair bit of action, both in terms of pricing and volume on Godfrey Phillips. Worth a look at this juncture, or avoid?
Both the counters are into a steep correction, so it won't be advisable to catch the falling knife for the time being. Better to wait for a stabilization in both the counters. For ITC, it has tested 52 weeks low in today's trading session, so I'm expecting that it might aggravate in the short term period. Looking at the historical trend, 320, 315 will be the next support zone for ITC. So if it stabilizes near the zone of 320, then one may look for accumulation in the counter, but that too in a staggered manner, not very aggressively. And same applies for Godfrey Phillips, because this counter have also seen a strong correction. No doubt today the counter was having a kind of a pullback, but overall the strength remains on the lower end. So I expect that if there will be any kind of a stabilization near the zone of 2100 on the lower end, then one may look for accumulation in the counter. Until that time, better to stay sidelines.
Okay, not advisable to catch a falling knife, and of course you have to take stock of the levels there to really make a decision as to whether you want to enter into these stocks or not. But talk about L&T as well. The stock had started seeing traction, right? But today, of course, there were some reports in terms of the Middle East Economic Digest, wherein they reported that Kuwait may be discussing cancellation of oil project tenders worth $8.5 billion, and they could be looking to rebid those tenders as well. Of course, L&T was one of, according to analysts, L&T was one of the L1 bidders for projects worth over $4.5 billion. So I think that is something that led to the kind of correction we saw in shares of L&T. But the company came out with a clarification also. They've said that projects referred to in the report were not part of the company's order book. I think post that we saw 1.5% kind of recovery from the day's low in the stock of L&T. But the stock has started seeing some traction in recent times, right? How would you look at today's move, and what would you do with the stock?
See, overall, technically, if I have to speak, then this counter is retesting the neckline of the breakout, because the breakout on the weekly and monthly time frame was approximately around the zone of 3800. So I will be considering the correction as healthy and opportunity to reaccumulate the counter. So overall, any dip towards the zone of 3800 should be seen as buying opportunity in L&T, and in a staggered manner, definitely, because one should not again be very much aggressive with the kind of correction the counter is into. So one should start accumulating in a staggered manner around the zone of 3800. Technically, it will be a very healthy correction, and any further consolidation or even stagnation around the same levels 3800 can provide very strong technical perspective from an accumulation point of time. So it will be advisable to start accumulating the counter from short to medium term perspective.
Okay, start accumulating from short to medium term perspective. That's L&T for you. But let's talk about the badgered, beaten down real estate space. Godrej Properties in particular, I think hit a fresh 52-week low today. The sector itself has been hammered out of shape. Any thoughts? Do you think that the worst may be over chartically? How is the setup looking like, particularly for a Godrej Properties? And within the realty pack, what are you really looking at right now?
As of now, the whole pack is kind of witnessing a kind of corrective phase. So Godrej property, to be specific, as it has witnessed a breakdown in today's trading session, the zone of nearly 1950, 1920 was a strong support levels, but the breakdown below this has quite dampened the technical structure. So I'm expecting that if there will be further correction, then 1800, 1780 will be the next potential target on the lower end. So that will be the target that one can expect from a short-term point of view as a short seller. But if there will be any kind of pullback or recovery, which can give a kind of a momentum back towards the 1950 odd levels, then only one can look for buying opportunity. As of now, it is into a deep bearish sentiment. So better to look for short opportunity in this counter. Any bounce towards the zone of 1900, 1920 could be seen as a selling opportunity in this counter.
Okay, that's the view on Godrej Properties. But I want to get in your attention on shares of a PVR Inox. Ended higher by 7% or so. Of course, the kind of revenues or the kind of response that Dhurandhar has got on the box office. Would you expect this stock to emerge as a Dhurandhar this year? Do you think this will revive the fortunes of the stock of a PVR Inox? And on the charts, which is the next level to watch out for? It's cleared the 1000 level on the upside. Would you expect 1100 kind of levels anytime soon, given the kind of success that movie has seen?
See, overall, Dhurandhar has been a very good movie, but looking at the stock price of PVR, there has been no correlation between the popularity of Dhurandhar movie and this counter. So overall, there has been very strong flat to negative kind of movement that has been seen in PVR. So I'm expecting that technically the counter is still into oversold terrain. So there can be some kind of pullback that can be seen in the short term period, but not very positive in this counter. The short term pullback can see some kind of movement towards the zone of 1120 to 1130, but that is a very strong resistance level. If it surpasses that zone on a decisive and a sustained manner, then only one can look for buying opportunity. Till that time, better to stay sidelines from this counter.
Okay, so no such luck for stock of PVR Inox. Of course, the fortunes of this stock remains on the downside, not very far from its 52-week low, but at least it has cleared 1000 level on the upside. But some of the shares of capital market plays like Motilal Oswal, a lot of other names as well were doing fairly well today. And if you talk about capital market as a theme, we've seen good rally coming in for a BSE as well. Recently, I think I was discussing it with some technical expert when we were mentioning that it has crossed all those key moving averages as well, and it's trading well above them. Any of these names that excite you within the capital market theme? Anything, AMC, brokerage, even exchange for that matter? A couple of them, if you could list out.
Various counters are looking very positive to me. The first one, which is kind of having a very decent movement, is Anand Rathi Wealth. So that is a decent counter, and I'm expecting that in the coming period, it might see some kind of a strong momentum once it breaches the zone of 3200. So that will be the first counter which is into the radar. Then again, BSE is also definitely looking very positive above the moving averages. So there is a strong possibility for the counter to see some kind of a strong traction in the coming period. Now, from those counters which have seen a decent correction and there is a kind of a reversal which is expected, so CDSL will be the pick from a reversal point of view, because the counter have already seen a decent correction. The counter is at a historical support levels, and technically also the parameters are approaching towards the oversold terrain. So I'm expecting that in the coming period, not at current levels, but in the short term period, there is a possibility of a reversal in CDSL as well. So any breakout above the zone of 1480 to 1500 will be providing a strong momentum in this counter, and one then may look for buying opportunity from a short term point of view.
Okay, those are some of the capital market plays to keep on your radar. But what about the likes of Dixon Tech? Another 5% down today. We've seen a fair bit of correction in some of these EMS names. Are they anywhere close to their bottom?
Technically, the counter is looking very weak. There has been significant breakdowns in the counter one by one. All the technical support has been broken down in Dixon Technology. So I'm expecting that with the kind of momentum, there is a strong possibility for a continued sell-off in the counter. Although technically there has been some kind of developments which might signal an early signals for a reversal, but it will be advisable to stay sidelines from the counter until we see a kind of a stability on the lower end as well. So on the technical front or on the levels front, 10,900 will be the support levels. And if it breaches that level also, then there should be a definite exit from the counter. If not, then there might be a possibility of counter trend from a short to medium term perspective.
Okay. Another counter that's catching my attention is AU Small. Of course, this stock has done extremely well. It has been an outperformer. But in recent times, we've seen some correction. Would you advise, traders and investors rather to wait for more dips to get into it? Is there a little bit more correction in store?
There has been very secular uptrend in this counter. There was a cycle of higher highs only on the daily time frame chart. So better to wait for a healthy correction, because post the breakout it witnessed around the zone of 830, 820, there has been no looking down for the counter. So better to wait for a healthy correction. Technically, there has been a very strong stagnation at the overbought terrain, and from there onwards, with the kind of today's development, there has been a breakdown on the technical front. So I'm expecting that in the short term period, there is a possibility of some pull off or some profit booking from current levels. But technically, the zone of 900 followed by 880 will be an apt zone to start accumulating. At present levels, better to start booking profit if someone is already holding position.
Okay, that's about AU Small Finance. And lastly, what do you do with, how have you approached IT stocks? Of course, today HCL Tech, TCS were flat for a better part of the session, but towards the end we saw TCS picking up traction. But other IT stocks like Tech Mahindra and even Wipro for that matter were quite upbeat. Tomorrow we have Infosys reporting numbers. Ahead of Infosys numbers, how would you be placed, or how would you be positioned in some of these IT names?
Majority of the IT space counters are into a strong consolidation zone. After the rally that we have seen in the recent period, majority of the counters have underwent into a strong consolidation. But the positive side is they are hovering above the short and medium term moving average. So overall, the strength is still there in the counter, but definitely now the volatility will trigger in once the quarter earning result will start coming out for majority of the counters. So there will be volatility, but from a medium to long term perspective, I am quite bullish. There might be some kind of fluctuations in the short term period. So that could be seen as an opportunity if there will be any kind of correction in majority of the heavyweight counters.
Okay, all right, point taken. With that, Osho would like to thank you for taking out time and joining in this afternoon. Always a pleasure, and I look forward to our next interaction as well. Have a great evening.
Thank you so much.
Thanks a lot. On that note, just shifting focus to some stocks that were in focus today. Of course, there were quite a few, but let's take stock of what the street verdict has been like for TCS, because it's a bellwether, right? And it handed in a fairly steady show, although the bottom line did take a hit on the back of multiple one-offs, but other than that, revenues and margins were largely in line. In fact, even in terms of their annualized AI revenue, they gave us some color again. Of course, in their December analyst meet, they had said that it was $1.5 billion. So yesterday, they pointed out that the annualized AI revenue stood at $1.8 billion in CC terms. Demand environment continued to improve in Q3. That's what the management pointed out. And they've said that one key pillar for the company will be participating in the larger ecosystem, which means being more acquisitive going forward. But they won't be looking to acquire companies just to contribute to the bottom line and top line. The focus will be on buyouts that could create strong energies and deliver greater value to customers. That's what the MD and CEO told CNBC TV 18 in an interview with them. In fact, they are expecting calendar year 2026 to perform better than what the company did in calendar year 25. In fact, if you look at the street verdict, most of them are fairly cautious because they want more color on how overseas revenue will pan out. But Macquarie is the most bullish, because here they have a target which is the highest on street of 4,800 rupees per share, which implies a near 50% upside from current levels. But we have other brokerages who are a little more cautious, because Citi has retained its sell call. The target price is 3,020 rupees per share. They've noted the fact that the company has reported an inline set of quarter, excluding of course all the exceptionals in terms of one-off hit on bottom line. But international business growth, may disappoint going forward, because it is fairly muted. That's what Citi has pointed out. And they've also pointed out that equipment and software are the segments that have driven nearly half of the quarter-on-quarter growth. In terms of Nomura, they have a neutral call. Target price is a little higher here, 3,300 rupees per share. They've noted the fact that the company has reported a modest beat on revenue as well as margins. But according to them, visibility on the growth leadership as to where it will come from going forward, that's something that remains limited. And they have also said that any meaningful margin expansion in FY27 appears unlikely without stronger growth. Remember, the management had earlier guided for, not guided, they don't really give guidance, but they had provided us some color saying that 26 to 28% margin is something that they are aiming for. But according to analysts, that looks unlikely at the current juncture for FY27. Move on to HSBC, that has a hold call. Target price is at 3,450 rupees per share. They've said that there is no material change in growth trends in this quarter, and they've also pointed the fact that margin remains solid, and the commentary in terms of demand was fairly positive. Management said that Q2 saw improvement in demand, and Q3 as well saw some improvement. And according to the brokerage HSBC, the risk reward at the current juncture appears balanced for TCS. Lastly, CLSA has an outperform call here, and the target price is in excess of 3,590 rupees per share. In another development, let's move on to some macro development then. 10-year bond yields, they jumped 5 basis points to 6.63% today. And this was, of course, because of a reason. Bloomberg has said that Indian bonds will not be included in the Bloomberg Global Aggregate Index, but they've said that they will likely keep the review open and ongoing. It has also said that it would update the review by mid-2026. Now, Bloomberg said that the operational and market infrastructure gaps need further review before inclusion. Of course, Goldman Sachs had estimated the inclusion could bring about somewhere around $10 to $20 billion of inflows into the Indian debt market. Of course, this has come as a disappointment to the bond market, which is why we saw a reaction of that sort. But yes, that's something that, of course, the bond market took stock of. But yes, today it was a fairly volatile day, and tomorrow promises to be another volatile session. As I mentioned, that it's Sensex expiry tomorrow, so brace for some more volatility. But the good part is that the recent swing low that we had made of below 25,500, at least we are far off from that level. So that's something that one should take heart from, and also the fact that we saw a good recovery come by in the last half an hour to 40 minutes of trade. Good thing that we ended above that 25,700 mark, and of course not to forget the kind of recovery we saw in the broader end of the markets, with breadth improving and the mid-cap index paring its losses quite significantly of 500 points from days low. But tomorrow, of course, aside of the Sensex expiry, Infosys will be reporting numbers post-market hours. We'll take stock of that, and of course we will be getting you coverage on that as well. So important day tomorrow as well, before that holiday on Thursday on account of BMC elections. But with that, we're completely timed out. On closing bell, thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates. Have a great evening, and come back and join us tomorrow morning at 9 a.m. Thank you.